Good evening, and welcome back to SleepWise. Tonight, we drift into the story of one of humanity's quietest inventions. It is not a machine, not a medicine, not a monument of stone. It is a promise, the promise that when disaster comes, no one should have to face it alone. We call it insurance now. And the word has grown plain with use. It lives in paperwork and policies, in renewal notices and fine print. But beneath that dull surface lies something ancient and almost tender, an idea that began whenever human beings first looked at the sea, the sky, or the dry fields and asked the oldest question of all: what if? What if the ship does not return? What if the fire comes in the night? What if the harvest fails, the roof falls, the breadwinner dies before the children are grown? For most of history, there was no good answer. A single storm could erase a family's fortune. A single spark could take a street, a livelihood, a lifetime of careful work. And so, slowly, people began to experiment with a different kind of arithmetic. Nearly 4,000 years ago, in Babylon, merchants sending goods down rivers and across deserts could take a special loan. If the caravan was robbed or the ship was lost, the debt was forgiven, and for that mercy, the lender charged a little extra. The Code of Hammurabi, carved into dark stone, gave such arrangements the weight of law. Risk had been given a price, perhaps for the first time. On the Greek island of Rhodes, sailors developed another gentle custom. If cargo had to be thrown overboard in a storm to save the ship, the loss was shared among everyone whose goods survived. No single merchant bore the sea's anger alone. In Rome, ordinary people formed burial societies, paying small sums each month so that when death came, the funeral would be dignified and the family would not be ruined by grief twice over. Soldiers, craftsmen, freed slaves, all pooling coins against the one certainty: no one escapes. These early arrangements were scattered and simple, but they shared a single insight. Misfortune falls on the few, yet it can be carried by the many. Spread the weight, and it becomes bearable. If these quiet journeys help you rest, you can follow SleepWise and share it with someone who might enjoy falling asleep while learning something new. There is more of this story waiting, and it travels far, because the idea of shared risk, born beside rivers and harbors of the ancient world, would wander for centuries, through guild halls and merchant cities, through fire and plague, until it finally settled, of all places, in a crowded little room in London, thick with smoke and conversation, where the air smelled of something new and dark and bitter. A drink had arrived from distant lands, and around it, the modern world of risk was about to be born. But before we step into that crowded London room, the story must travel a little further, through the harbors of Italy and the ashes of a burning city. In the merchant republics of the Mediterranean, the old Babylonian bargain slowly changed its shape. In Genoa, in the 1300s, traders began signing a new kind of contract, one in which the protection was finally separated from the loan itself. Now, a merchant simply paid a fee before the voyage began. In return, another man promised to make good the loss if the ship never came home. That fee was called a premium, from a Latin word meaning reward. The written promise was called a polizza, a word that would soften over the centuries into the English word policy. The men who made these promises developed a simple habit. The details of the voyage were written at the top of the page, and each man who accepted a share of the risk signed his name beneath them, under the writing. They became known as underwriters, and the name has never changed. For 300 years, this quiet craft traveled north with trade through Bruges and Antwerp and Amsterdam until it reached London. And it was London, in the year 1666, that learned the true meaning of risk in a single terrible week. The fire began in a bakery on Pudding Lane in the small hours of a September morning. Driven by wind and fed by streets of dry timber houses, it burned for 4 days, while its people fled to the river and the fields. When it finally died, more than 13,000 homes were gone, along with nearly 90 churches and the great medieval Cathedral of St. Paul. A merchant city had watched generations of wealth turn to smoke. In the rebuilding that followed, a builder and economist named Nicholas Barbin opened an office that sold protection against fire, one of the first of its kind anywhere in the world. Houses that were insured carried small metal badges on their walls called fire marks, so that the company's own firefighters would know which buildings they were paid to save. Insurance was no longer only a matter of ships. It had come ashore, into the streets where people slept. London rose again in brick and stone, and its appetite for trade swelled. Ships left the Thames for the Baltic and the Mediterranean, for the Americas and the East, and every voyage was a fortune gambled against weather, war, and the patience of the sea. Every merchant in the city needed the same 2 things: someone willing to share the risk, and news, fresh, trustworthy news. And so, in the 1680s, on Tower Street, a short walk from the river, a man named Edward Lloyd opened a coffee house. He never insured a single ship, and he could not have known what he was starting. But by opening his door in the right place, at the right moment, he had founded the most famous name in the history of insurance. Of Edward Lloyd himself, history has kept only fragments. He was born around the middle of the 1600s, and his name first appears in a London newspaper in 1688, not for anything he did, but simply as a landmark, a place where a reward for some stolen watches could be collected. That small detail in its way tells us everything. Lloyd's coffee house was already somewhere that London knew. Coffee itself had reached England only a generation earlier, and the city had fallen for it completely. The first coffee house had opened in a narrow alley off Cornhill in the 1650s, and within a few decades there were hundreds dim, warm, candlelit rooms where a single penny bought a dish of coffee and a seat at the long tables. People called them penny universities because the conversation was open to anyone who could pay for a cup. Unlike the tavern, the coffee house was a place of sober talk, of newspapers read aloud, of argument, of business done with a clear head, and each house in time gathered its own tribe. Stockbrokers crowded into Jonathan's, and merchants with goods to auction filled Garraway's. Poets and playwrights held court at Will's. Clergymen favored Childs, and physicians took their coffee at Batson's. Lloyd's, standing on Tower Street near the water, drew the men of the sea and the men whose money sailed with them. It was a natural harbor for them. The Thames lay only minutes away with its forest of masts, and the Tower, the Custom House, and the Navy Office all stood close by. Ship captains fresh from long voyages found their way to Lloyd's tables. So did merchants with cargoes still afloat somewhere on the ocean, and owners waiting for word of vessels that were months overdue. And wherever ship owners and merchants gathered, a third kind of man appeared among them, quieter, listening carefully, weighing everything he heard. The underwriter, the man willing for a price to carry a stranger's risk upon his own fortune. Edward Lloyd, so far as anyone knows, never underwrote a voyage himself. He sold coffee and kept his tables full, but he understood with remarkable clarity what these particular customers truly hungered for. It was not the coffee, good as it may have been, it was knowledge. News of ships and storms, of prices and pirates, of wars in distant waters that could sink a fortune before its owner even knew the fighting had begun. So Lloyd set out to provide that knowledge more faithfully than anyone else in London, and his house began to change from a coffee room into something the world had not quite seen before. In 1691, he moved the business to Lombard Street into the beating heart of the city's money world. The sign above the door still carried his name, and inside, the tables were quietly filling with the future. What Edward Lloyd built next was not an insurance company. It was something subtler and, in its day, perhaps more valuable, a machine for gathering truth. He cultivated correspondents in the ports of England and far beyond, men who sent regular word of arrivals, departures, and losses. He paid runners to hurry up from the docks the moment a ship dropped anchor in the Thames, so that Lloyd's tables knew before almost anyone else in the city. In the coffee room itself, fresh intelligence was read aloud from a raised desk, almost like a pulpit, so that every table heard the same news at the same moment. A ship sighted safe off the coast of Ireland. A cargo landed in the Pool of London, a vessel long overdue, and now feared lost with all hands. For the underwriters bent over their papers, this was everything. A man who promises to pay for a sunken ship is really trading in information, and his judgment can only ever be as good as his news. In 1696, Lloyd went a step further and began printing a small newspaper of his own called Lloyd's News. 3 times a week, it carried shipping reports and foreign intelligence to those who could not sit all day in the coffee room. The little paper lived less than a year. One of its reports touched too carelessly on the affairs of Parliament. The House of Lords took offense, and Lloyd quietly stopped his presses rather than fight a battle no coffee man could hope to win. But the idea refused to die. Decades later, the house would print again. A single, careful sheet of arrivals, departures, casualties, exchange rates, and prices called Lloyd's List, which grew into one of the oldest continuously published journals on Earth. For nearly 3 centuries, the fates of the world's ships would be recorded in its narrow columns. There is something quietly moving in all of this. Before the telegraph, before radio, before any message could outrun a sailing ship, one coffee house in London came as close as the age allowed to hearing the whole ocean at once. Every tide brought fresh sentences to read, and every sentence moved money, hope, or grief. And beyond the room, families waited on the same words, because the ships carried husbands and sons as well as silk and sugar. Sometimes the news from the reader's desk meant fortune. Sometimes it meant a sudden hush at one of the tables and a man quietly rising to leave. Through it all, Edward Lloyd poured his coffee and kept the information flowing, understanding that his house now traded in something rarer than money. It traded in trust, the one commodity an underwriter could not do without. So the room had its news, arriving and departing with the tides. It also had its rituals and ceremonies, and one of the strangest of them was measured, of all things, by the slow burning of a single inch of candle. Among all the customs of the coffee house, none was more theatrical than the auction by inch of candle. When a ship or her cargo was to be sold, sometimes a prize taken in war, sometimes a weathered vessel whose owners had given her up. Notices were posted, and on the appointed day the room filled early. At the front, beside the auctioneer, stood a stub of candle no taller than a thumbnail. The flame was lit, and the bidding began. Men called out their offers while the little light burned, and the rule was simplicity itself. The last bid spoken before the flame died won the ship. There was no hammer to anticipate, no countdown that a clever man could game, only fire deciding in its own quiet time. Sometimes a whole ship changed hands in the span of a few breaths, for the candles were cut deliberately short. The diarist, Samuel Pepys, who attended such sales on behalf of the Navy, recorded the small cunning that grew up around them. An old hand taught him the secret, that in the instant before a candle dies, its smoke begins to descend, curling downward around the wick. A watchful man could read that signal and slip in his final bid a heartbeat before the darkness fell. Pepys, delighted by the trick, wrote it down in his diary that very night. So even here, in a game of chance, information was the true advantage. The coffee house always rewarded those who watched most closely. A lesson its underwriters had long since learned by heart. Day by day, the room kept its gentle rhythms. Waiters in the service of the house moved between the tables with tall pots of coffee, carrying messages, calling out names above the murmur. Merchants arrived with the morning. Captains drifted in with the tide. Brokers hurried between them, matching the men who feared a risk with the men who would carry it. In the boxes along the walls, high-backed wooden booths, each with its own table and its own candle, papers were spread, voyages described, and dangers weighed in low, unhurried voices. A man might insure a cargo of silk from Smyrna at one table, then turn and hear that a hurricane had scattered a fleet in the West Indies. Fortune and ruin sat close together at Lloyd's, often sharing the very same bench, and slowly, without any plan or charter or act of Parliament, the customs of the room were hardening into something very like law. There were ways things were done at Lloyd's, how a risk was described, how a fair price was found, how a promise became binding with nothing more than ink and a good name. At the center of it all lay a single, unassuming piece of paper, passed from table to table through the candle smoke and conversation. The men of the room called it, plainly enough, the slip. And on that small page, line by line and name by name, the whole architecture of modern insurance was quietly being drawn. The slip was nothing much to look at. A single sheet of paper covered in a clerk's quick hand, yet everything depended on what it said and on who signed beneath. A broker prepared it on behalf of the merchant. At the top went the essential facts of the voyage, the name of the ship and her master, the ports of departure and arrival, the nature of the cargo, and the value to be insured. Then the broker began his rounds. He moved from box to box through the coffee room, laying the slip before one underwriter after another, answering questions about the vessel's age and timbers, her captain's reputation, the season of sailing, the dangers of the route, the rumors of war. Each underwriter who accepted a share wrote his name beneath the terms, along with the portion of the risk he was willing to carry. One man might take 1/10, another 1/20th. And so the fate of a single voyage was divided among many shoulders. When the names added up to the whole value, the slip was complete. The risk had found its home, not in one fortune, but in a small community of them, each man watching the same horizon. Later, a formal policy would be drawn up in the old language of the sea, with its long, almost musical list of dangers, perils of the seas, of fire and enemies, of pirates, rovers, and thieves. The wording changed little from year to year, polished smooth by use like a stair worn down by feet. There was no vault of money standing behind these promises, and no company seal. Each man pledged his own private fortune down to the last coin, and each was bound only for his own line, never for his neighbor's. The whole arrangement rested on candor. A merchant who hid what he knew, a leaking hull, a nervous crew, a cargo already whispered to be lost, poisoned the bargain at its root. So the first law of the room, long before it was the law of the land, was utmost good faith. Tell everything, conceal nothing, and the arrangement rested just as heavily on the underwriter's good name. A man who quibbled over honest claims would soon find the brokers walking past his box without a glance. A man who paid promptly, even when it hurt, found the best risks brought to him first. It is worth pausing on how fragile all of this appears, and how well it worked. No regulator watched over the room. No government stood behind the promises. There was only ink, reputation, and the long memory of the tables. Ships sank, and men were sometimes ruined. That was the nature of the trade, and everyone who signed knew it. But the slips kept moving year after year because on most days this quiet system was simply better than facing the ocean alone. By now, though, the room had grown larger than the man whose name hung above its door, and Edward Lloyd himself would not live to see most of what it became. Edward Lloyd died in 1713 and was buried at St. Mary Woolnoth, a church standing only a few steps from his door on Lombard Street. He had kept his coffee house by then for nearly 30 years and kept it well. He left behind a family, a respectable fortune, and a name that was about to outgrow them both. The business passed first to a son-in-law, then to other hands, and eventually to men with no tie to the family at all. Yet the sign above the door still said Lloyd's, because that was where the shipping world had agreed to meet. And the shipping world does not lightly change its meeting place. It was under those later masters in 1734 that the house began printing the little paper we spoke of earlier, Lloyd's List, the careful sheet of sailings and fates that would outlive every one of them. But as the century wore on, something else crept into the room beside the honest business. The same instincts that let a man price a voyage, the feel for odds, the cool appetite for risk, could be turned toward darker amusements. Men began writing policies that were really wagers in disguise. They bet on the outcomes of battles and sieges, on the verdicts of famous trials, on elections and royal appointments, and most ghoulishly of all, on the lives of strangers. When a public figure fell gravely ill, speculators hurried to insure his life, though they had never met him, and stood to lose nothing by his death except their stake. The newspapers printed the going odds on a sick man's survival as casually as they printed the price of wheat. There were even policies written on whether a celebrated foreign diplomat was secretly a man or a woman, a question London found endlessly entertaining, and one the courts at last refused to touch. This was insurance with its heart removed. The outward form remained a premium, a policy, a payment at the end, but the purpose had quietly inverted. Instead of softening misfortune, these contracts gave strangers a reason to hope for it. A man holding a policy on your life is not, in the deepest sense, your well-wisher. The serious underwriters watched all of this with growing dismay. They had spent half a century building something rare, a market that ran on trust and plain dealing. And now their coffee house was spoken of in pamphlets and drawing rooms as little better than a gaming table. Honest merchants began to hesitate at the door. The room that had once traded in truth was becoming famous instead for noise. It is an old story, and a quietly human one. Every successful place eventually attracts people who want its rewards without its discipline. The coffee house was no exception. Something, in the end, had to give, and when it finally did, it was not the gamblers who left the room, it was the underwriters. The break, when it came, was quiet. No proclamation, no slammed door, no quarrel in the street. Just a waiter, a kettle, and a new address. In 1769, a waiter from the old house named Thomas Fielding crossed into Pope's Head Alley and opened an establishment of his own, calling it New Lloyd's Coffee House. Behind him stood the most serious underwriters and brokers of the market, who simply rose from their boxes and moved. The gamblers could keep the old room. The men who actually insured ships took the name, the customs, and the trust, and carried them around the corner. The new premises were honest but cramped, and it soon became plain that the center of the world's shipping could not live forever above a borrowed kettle. So in 1771, 79 merchants, underwriters, and brokers each put £100 into a common fund and signed their names into a book. With that list of signatures almost casually, the Society of Lloyds was born. It was no longer a coffee house with customers. It was a society with members, self-governing and self-selecting, answerable to a committee of its own choosing. Among the men doing the practical work was a young underwriter of unusual energy, born far away in St. Petersburg, whose name we will meet again very soon, John Julius Angerstein. It was largely through his efforts that in 1774 the society moved into rooms at the Royal Exchange, in the very heart of the city of London, where the merchants of the world crossed paths each day. The old furniture of habit traveled with them. The underwriters still sat in their wooden boxes. The staff were still called waiters, as they are to this day, and coffee was still poured, though by now the drink was a courtesy, and the business was the business. In that same decade, Parliament drew its own line at last. A new law forbade insuring any life in which you held no genuine interest. No more policies on ailing strangers. No more odds quoted on another man's deathbed. If men wished to gamble, the law now said, then let them call it gambling. Insurance was to mean something narrower and cleaner. Protection against a loss that was truly your own. So, within a single remarkable decade, the institution found its lasting shape. A room, a book of names, a committee, and a settled tradition. What had begun as one man's coffee pot had become a permanent piece of the world's machinery. The members could be forgiven for feeling that the story had reached safe harbor. The gamblers were behind them. The law was beside them, and the whole ocean of trade lay ahead. But machinery does not choose its cargo, and among the voyages entered so neatly in the ledgers of that age were some that no gentleness of language should ever be allowed to soften. For all its rituals and good names, Lloyd's belonged to its age, and its age was the age of the Atlantic slave trade. Through much of the 1700s, British ships carried captive African men, women, and children across the ocean, tens of thousands of them each year. Those voyages were financed, supplied, and insured like any other commerce of the empire. And the marine insurance market of London, with Lloyd's at its heart, wrote policies on slave ships as readily as on sugar or silk. In the cold language of those documents, human beings appeared as cargo, their lives covered by a line of ink, the way one covered barrels and bales. One case has come to stand for all of it. In 1781, a slave ship called the Zong, badly navigated and running short of water, was crossing toward Jamaica. And over several days, her crew threw more than 130 captive people into the sea. The owners then did something that exposed the whole machinery at once. They filed an insurance claim, not for murder, which the law of the day did not recognize there, but for the loss of property. The underwriters refused to pay, and the dispute went before a London court. And so the killing of more than 100 human beings was argued calmly as a question of cargo, necessity, and the wording of a policy. In the end, the insurers did not pay, and no one was ever prosecuted for the deaths. But the case refused to stay quiet. A formerly enslaved writer named Olaudah Equiano carried the story to the campaigner Granville Sharp, and through them it reached pamphlets, pulpits, and Parliament. The Zong became one of the sparks of the British Abolition movement, proof preserved in an insurer's dispute of what the trade truly was. Within a generation, Britain outlawed the slave trade itself. Though slavery in the colonies endured for decades more, and its harms echoed far longer still. None of this asks us to make monsters of every man in the room, and none of it permits us to look away. Insurance is a mirror. It prices whatever its age is willing to ship. In that century, the age was willing to ship human beings, and the market, with very few exceptions, did not refuse. More than 2 centuries later, in our own time, Lloyd's itself publicly acknowledged this history and apologized for its part in it. A late entry, you might say, in a very old ledger. The room at the Royal Exchange held all of this at once. The honest voyages and the unforgivable ones recorded side by side in the same neat hand. It is the heaviest truth in tonight's story, and it deserves to be carried, not hurried past. And it was in that same room, in those same years, that Lloyd's was about to be tested by something else entirely. 20 years of war reaching across every ocean on earth. The man who came to embody this next era had arrived in London as a boy of about 15, sent from St. Petersburg, knowing almost no one in the city. His name was John Julius Angerstein. He began as a clerk in a merchant's counting house, learned the sea trade ledger by ledger, and rose in time to become both broker and underwriter. His judgment grew so trusted that policies he backed were known in the room simply as Julian's, as though his name alone were a kind of security. It was Angerstein who had helped find the society its rooms at the Royal Exchange, and Angerstein who, decade after decade, steered Lloyd's from a loose club of individuals toward a true institution. Later generations would call him simply the father of Lloyd's, and he helped lead it through the storm of its age. From the 1790s until the field of Waterloo, Britain was at war with revolutionary and then Napoleonic France, a war fought, above all else, upon the sea. Merchant ships now sailed in great convoys under naval escort, and every convoy was a floating fortune insured at Lloyd's. Privateers hunted the stragglers, and premiums rose and fell with the news of each campaign like a pulse beneath the skin of the nation. In those years, the intelligence network that Edward Lloyd had begun with dock runners grew into something close to a national asset. Lloyd's agents and correspondents in ports across the world sent word of sailings, captures, and storms, and there were moments when the underwriters' room knew of events at sea before the Admiralty itself. The market also discovered in wartime something like a conscience. In 1803, the members founded the Lloyd's Patriotic Fund, gathering subscriptions to care for wounded sailors and soldiers and for the widows and orphans of the fallen. The fund presented swords of honor to the heroes of the fleet and quiet grants to the families of men who would never come home. When the news of Trafalgar reached London, a great victory and Nelson dead upon his own deck, the room that priced the war also helped the nation mourn it. Angerstein himself, grown wealthy, spent his fortune gently on paintings. Raphael, Rembrandt, Titian, and more. After his death, the nation purchased his collection, and those canvases became the founding heart of the National Gallery in London. It is a strange and rather lovely afterlife for an underwriter's money. Premiums earned on wartime convoys transformed into quiet rooms where anyone may now stand before a Rembrandt free of charge. But of all the stories those war years left behind, one belongs to Lloyd's more completely than any other. It concerns a frigate called the Lutine, a cargo of gold bound for Hamburg, and a bell that hangs in the underwriter's room to this very day. In the autumn of 1799, a frigate called the Lutine set sail from the English coast, bound across the North Sea for Hamburg. She had been French once. Her name means the little sprite, the tease, but she sailed now under the British flag. In her hold lay gold and silver worth roughly £1,000,000 of that era, an almost unimaginable sum, gathered to steady the banks of Hamburg through a financial panic. Rarely had so much wealth been trusted to one set of timbers. She never arrived. On a single stormy night, the Lutine was driven onto the sandbanks off the Dutch coast and broken apart by the sea. Of the more than 200 men aboard, only one was pulled from the water alive, and he did not live long enough to tell much of the story. The gold went down with the rest. The cargo had been insured at Lloyd's, and here the room did something that became part of its legend. The underwriters paid the enormous claim in full and paid it promptly, though the loss cut deep into many private fortunes. Because they had paid, the wreck and her treasure now belonged to them. For decades afterward, salvors worked the shifting sands, and a portion of the gold was slowly teased back from the sea, though much of it lies beneath those banks still, guarded by tide and time. Then, in 1858, the salvage crews raised something worth more to Lloyd's than any coin. They brought up the ship's bell. The bell was carried to London and hung in the underwriting room above the caller's desk, and there it took on a second life. From then on, when hard news arrived, the bell was struck, and the whole room fell silent together. One stroke meant loss, a ship gone, a crew unaccounted for. Two strokes meant good news. A vessel feared missing had come safely home. There was wisdom hidden in the ritual. By sounding the news to every ear at the same instant, the bell made certain that no underwriter could quietly trade on knowledge his neighbors did not yet share. Fairness cast in bronze. Even the ship's rudder was raised from the sands and carved into a chair and a table for the chairman of Lloyd's, so that the market's leaders ever after would sit upon the memory of a loss. Today the bell is struck only on rare and solemn occasions, for remembrance, for catastrophe, for moments when the whole market needs to stand still together. The old bronze is spared the daily news now, and its silence has become a kind of honor. A drowned ship in the end became the voice of the room, mourning, transformed into ceremony. But the bell could only ever announce what had already happened. The harder question, the one underwriters faced every single morning, was what might happen next. And for that question, in quiet studies, far from any harbor, a new kind of knowledge had been growing for a long time. Let us step out of the room for a little while and ask the quietest question in this whole story. How does anyone know what a risk should cost? For most of history, the honest answer was guesswork, seasoned and careful, but guesswork all the same. Then, in the middle of the 1600s, two French mathematicians began exchanging letters about a gambling puzzle. Blaise Pascal and Pierre de Fermat wanted to know how to fairly divide the stakes of a game interrupted before its finish. In answering that small question, they founded something immense: the mathematics of probability, the art of measuring what has not yet happened. A few years later in London, a haberdasher named John Grount began studying the city's bills of mortality, the weekly parish lists of burials, and of what people had died. He was a tradesman, not a scholar, but he noticed something nobody had quite seen before. One by one, deaths were unpredictable, but added together, year upon year, they fell into patterns of astonishing steadiness. Roughly so many from fever, so many from age, so many from accident, season after season. From those lists, Grant built the first rough table of human survival. Death, viewed in crowds, had a shape. Then the astronomer Edmund Halley, the same man whose comet still carries his name, took the idea further. Using the careful records of a Central European city, he built a true mortality table and showed how to price a promise on a human life according to the age of the one living it. Mathematicians gave the underlying principle a name: the law of large numbers. No one can say which house will burn or which heart will fail. But among 10,000 houses and 10,000 hearts, the yearly count becomes almost calm. Chance, gathered in sufficient crowds, turns into order. It is one of the strangest mercies in mathematics. In the 1760s, a London society called the Equitable became the first to sell life insurance priced by such tables, a premium fitted to your age. Its chief calculator took a brand new title for his work. He was called an actuary, and so the industry grew two traditions side by side. The life offices ran on tables and calculation, while at Lloyd's the marine men still priced each ship by eye, by experience, by the look of her captain, judgment and mathematics, nerve and number. Insurance has needed both ever since, the way a sailor needs both chart and weather sense. There is something quietly tender in all those tables, if you sit with them. Men counted the dead patiently so that the living could be protected from what was coming. But every table and every seasoned eye rests on one silent assumption, that tomorrow will broadly resemble yesterday. And on an April morning at the start of the 20th century, on the far side of the world, that assumption broke in less than a minute. Just after 5 o'clock on an April morning in 1906, the city of San Francisco began to shake. The ground moved for less than a minute, and in that minute, the modern age of catastrophe began. The earthquake threw down walls and twisted the streets, but the deeper wound came afterward. Broken gas lines and toppled stoves set fires across the city, and the same quake had shattered the water mains that might have fought them. The fires burned for 3 days. When they finally died, some 4/5 of San Francisco was gone, along with more than 28,000 buildings. Thousands of people had died, and more than 200,000 were left without homes. Then came the second disaster, the quieter one, played out in offices rather than streets. Most policies in the city covered fire, but many excluded earthquake. And in San Francisco, the earthquake and the fire were tangled into a single ruin. Which peril had truly destroyed a given building, the shaking or the flames that followed? Some insurance companies seized on that question to argue, to delay, to offer a fraction of what was owed. A few simply collapsed under the weight of the claims. At Lloyd's, the matter landed on the desk of an underwriter named Cuthbert Heath. He had been nearly deaf since his youth, gentle in his manner, and, by common agreement, the most original underwriting mind of his generation. For 20 years, Heath had been quietly pushing Lloyd's beyond ships, writing its first policies on burglary, on jewels, on earthquake and storm. He believed that almost any honest risk could be measured and carried. Now, his San Francisco agent cabled London, asking how the claims should be handled. Heath's reply became one of the most famous instructions in the history of commerce. Pay all of our policy holders in full, irrespective of the terms of their policies. Not because the small print required it, because the promise did. Lloyd's paid out millions upon millions of dollars at a time when a single million was a fortune, and the money moved quickly while the ash of the city was still warm. Other honest insurers paid in full, too, and were remembered for it. But it was the cable from London that entered legend. For the rest of the century, American merchants and companies would carry their strangest and heaviest risks across the Atlantic to Lloyd's because of what the market had done when paying hurt most. There is a lesson folded into 1906. A policy is only paper, and a promise is only proven on the day that keeping it is expensive. Reputation, it turned out, was the truest capital Lloyd's possessed, and Cuthbert Heath, who understood this better than anyone, was only getting started. For if earthquakes could be insured, and burglars and storms, then why not nearly anything under the sun? The room was about to find out. What followed across the new century was one of the strangest flowerings in the history of commerce. Lloyd's became the place where the world brought the risks that fit nowhere else. The foundation remained sober enough. In 1912, the hull of the largest ship ever built, the Titanic, was insured in the Lloyd's market for roughly £1,000,000. When she struck the ice and went down, her name was entered in careful script into the lost book, as the names of lost ships still are entered today. The claim was paid in full within weeks. Grief and duty, recorded in the same steady hand. But alongside such solemn business, the market developed a taste for the singular. If a risk could be honestly described, the reasoning went, then somewhere in the room there was a man who could price it. A silent film comedian, famous for his crossed eyes, insured them against ever straightening, for his whole living depended on the squint. Film studios insured the legs of their dancing stars for $1,000,000, and the newspapers adored every word of it. Concert pianists insured their hands. A celebrated food critic insured his palate, and a winemaker insured his nose. The instruments in each case of an entire career. Each policy began with the same patient questions any cargo of silk would have faced. A whiskey company once offered a vast prize to anyone who could capture the Loch Ness Monster alive. And then, growing sensibly nervous, insured the prize at Lloyd's. The underwriters accepted, with one tidy condition: if the creature were ever caught, it would belong to them. And when the space age arrived, the market simply looked upward without blinking. In the 1960s, the first satellites were insured at Lloyd's, promises now orbiting far above any ocean the old marine men had ever known. It would be easy to dismiss the famous oddities as mere theater, and some of it, truthfully, was. A starlet's insured legs made splendid publicity, and the mystique served the star and the market alike. But beneath the showmanship lay the same old principle from the coffee house, stretched to its logical end. Insurance is the pricing of uncertainty, and uncertainty does not much care whether it wears a sailor's coat or a sequined costume. Behind every policy, strange or solemn, sat the same quiet machinery: a broker, a slip, a set of questions honestly answered, and a name signed beneath the terms. Which raises the question: this whole story has been gently circling all evening. When an underwriter at his box signed for a comedian's eyes, or a liner's hull, or a satellite, whose money exactly stood behind the ink? The answer was one of the most peculiar financial arrangements ever devised by careful people, and it rested from beginning to end on a quiet army the market called, simply, the names. A name was not an employee of Lloyd's, and usually not an underwriter. A name was a backer, a person of wealth who pledged that wealth to stand behind the promises made in the room. By the 20th century, the structure had settled into a quiet hierarchy. Working underwriters sat at the boxes and judged the risks. And behind each of them stood a syndicate, a gathering of names whose combined fortunes gave the signature its weight. To become a name, you had to show substantial wealth, place a deposit, and accept a condition that sounds almost medieval. Your liability was unlimited. If a syndicate's losses ran beyond its premiums and reserves, the names paid the difference from their private fortunes, their houses, land, and savings. The traditional phrase was that a name was liable down to his last cufflink, and it was never entirely a joke. In exchange came a privilege. In good years, a name earned underwriting profit on wealth that was merely pledged, not handed over. So the same fortune could earn twice, once in the room and once wherever it already worked. Membership became a quiet mark of arrival. Aristocrats and industrialists joined, then judges, surgeons, sports stars, and heiresses. And by the late 20th century, more than 30,000 names stood behind the market. Most of them never set foot in the room whose promises they secured. They received their accounts and their checks in the good years, and they trusted. The room itself, meanwhile, kept its old theater. Brokers queued at the boxes with their slips, just as they had in the coffee house. And the staff were still called waiters in livery after all those centuries. Beneath the Lutine bell sat the caller in his scarlet robe, singing out the names of brokers wanted at the rostrum, his voice rising and falling like a tide. Lost ships were still entered in the lost book by hand with a quill. It was a strange way to organize billions in risk, part market, part club, part ritual. But it had survived fire, war, and revolution, and carried an air of permanence few institutions on earth could match. Yet the whole graceful structure rested on one assumption so old that nobody thought to question it. The assumption was that a year's risks ended with the year, that when the books were closed, the past would stay past. Most policies work that way. A ship arrives, or she does not. A building burns this year or next. But a few promises, signed in the confident decades of the century, had no such ending. They covered harms that could take a lifetime to appear. In factories and shipyards across the world, men had worked for years amid a soft gray dust that seemed harmless as it floated in the light. The signatures that covered them waited patiently in the files, and far ahead, in courtrooms not yet built, the past was quietly preparing to send Lloyd's its bill. The gray dust was asbestos. For most of the 20th century, it had been treated as a marvel, woven into ships and factories, sprayed onto steel, packed around pipes and boilers, prized because it would not burn. But the men who cut and breathed it were falling ill, sometimes 30 or 40 years after the work was done. The fibers settled in the lungs and waited, and the diseases they caused were slow, cruel, and often final. As the century neared its close, the courts began to hold employers and their insurers responsible, and many of those old workplace policies had been written decades earlier in the Lloyd's market. This was the danger hidden inside long-tailed risk. A premium had been taken in one quiet year, but the claim arrived a lifetime later, far larger than anyone signing the slip could have dreamed. A second wave followed close behind as nations began cleaning up generations of industrial pollution and sent the bill through the courts to the insurers of the firms that had caused it. Old promises, again, came due in a changed world. Then the structure of the market turned these losses into something worse. Syndicates had long protected themselves by reinsuring with one another, passing a slice of their risk to a neighbor, who passed a slice along in turn. In the worst years, those slices traveled in circles. A single catastrophic loss could pass from syndicate to syndicate and arrive, magnified, back where it began. The market had reinsured itself in a great loop, and the loop drew tight like a noose. They called it the spiral. And so the bill of the past came due, billions upon billions of pounds, far beyond what those decades of premiums had ever gathered. Now, the old promise of the names showed its other harder face. Liability was unlimited, and these losses did not stop at any deposit or reserve. They reached all the way down into the private fortunes that stood behind every signature. Names who had joined for the gentle profit of a famous club found themselves owing sums that could erase everything they had. Many lost their savings. Some lost their homes, their health, the quiet security of their later years. There was bitterness, and there were lawsuits, and there was a wave of grief that ran through a class of people who had believed themselves safe. Some had not fully understood the risk they carried. The word unlimited, it turned out, had meant exactly what it said. By the early 1990s, the most famous name in insurance was losing money on a scale that threatened its very survival. The institution that had paid for San Francisco out of honor now wondered whether anyone could pay for this. 300 years of history hung in the balance, and saving Lloyd's would require it to break, at last, with the very tradition that had carried it so far. The rescue, when it came, was the largest and most delicate operation the market had ever attempted upon itself. They called it simply reconstruction and renewal. The heart of the plan was an act of separation. All the old poisoned liabilities, the asbestos, the pollution, the long-tailed claims of decades past, were gathered together and lifted out of the living market into a single vast reinsurance company created for that single purpose and named quietest. Into that vessel went the weight of the past, so that the present might breathe again. It was a kind of quarantine, sealing the old wounds away from new business, so that the living market could go on writing the trade of the present. The settlement was painful and bitterly argued. Many names felt wronged and said so loudly, and not all the bitterness ever truly healed. But enough of them accepted the lifeboat held, and the market survived a storm that had very nearly taken it under. Then came the deeper change, the one that altered Lloyd's forever. For 3 centuries its risks had been carried by individual men and women, pledging their own fortunes down to the last cufflink. Now, for the first time, the market opened its doors to corporate capital, to companies with limited liability, deep reserves, and no single fortune to ruin. Slowly, the long era of the individual name began to fade, and a more modern kind of money took its place. Something romantic was lost in that exchange, and something necessary was gained. The gentleman backer, staking his family's wealth on a stranger's voyage, gave way to the steadier balance sheet of the corporation. Through all of it, the old rituals carried on, now housed in a building that startled the world. In the 1980s, Lloyd's had moved into a tower on Lime Street designed by the architect Richard Rogers, a structure with its pipes, lifts, and ducts worn boldly on the outside, so that the great spaces within could remain open and clear. People called it the inside-out building. Some loved it, and some despised it, but no one in the city passed it without looking up. And in the heart of that ultra-modern hall, beneath all the steel and glass, they hung the Lutine bell, the same bronze voice raised from the sands of the North Sea more than a century before, the oldest relic of loss, hung at the very center of the newest of rooms. And so Lloyd's stepped into a new century, chastened, transformed, and still standing, no longer a club of gentlemen, but a global market built on companies and capital, drawn from around the world. It had nearly destroyed itself by forgetting how long a promise can live. Now it remembered, and with that hard lesson learned, we can step back one last time and ask what all of it has truly been for. Strip away the coffee and the candles, the bell and the boxes, and what remains is an idea simple enough to hold as you fall asleep. Insurance is the gathering of small certainties to soften a large uncertainty. Picture 1,000 households, each with a home they could never afford to lose. For any one of them, fire is unlikely, but for one or two somewhere among the 1,000 in a given year, it will almost surely come. No family can know whether the misfortune will fall on them. So instead of each waiting alone in the dark, they agree to something gentle. Each pays a small bearable sum into a common pool. When fire takes one household, the pool rebuilds it. The loss that would have shattered a single family is lifted instead by all of them together and barely felt by any. A catastrophe for one becomes a small shared expense for the many. That small payment is the premium. The shared fund is the pool. And the quiet magic that makes it work is the principle we met earlier, the law of large numbers. No one can predict a single accident, but across thousands of lives, the totals grow steady and knowable, steady enough that a fair price can be set and a promise safely made. The future stays unknowable for the individual, yet becomes almost calm for the crowd. This is what separates insurance from gambling. though the two can look alike from outside. A gambler creates a new risk for the thrill of it, hoping to win what was never his. The insured does the opposite, taking a risk that already hangs over them and trading its terror for a small certain cost. One manufactures danger, the other dissolves it. They are, in truth, near opposites wearing similar clothes, and the law has long labored to keep the two apart. And it is not quite charity either, though it shares charity's tenderness. Everyone pays in. Everyone is protected. The fortunate quietly carry the unfortunate, knowing that next year the roles between them might easily reverse. There is something close to grace in that arrangement when it works as it should. It asks us to accept a small loss we can bear, so that none of us need face a ruinous one alone. It turns private dread into shared resilience. That was the true discovery hidden in the candle smoke of the coffee house. The men bent over their slips were not merely chasing profit. They had found a way to let a whole community of strangers stand quietly behind one another's worst days. The ships and satellites, the pianist's hands and the burning cities were only the changing costumes of that single, patient idea. Beneath every one of them lay the same soft architecture, many shoulders, one weight. And once you see that shape, you begin to notice something larger. What a society chooses to gather around and protect says a great deal about what that society holds dear. Look closely at what a people choose to insure, and you find a quiet portrait of their fears and their hopes. Ships, when the sea was everything and a single voyage held a family's fortune. Homes, when a roof became the warm center of a settled life. Health, in nations that came to believe no one should be ruined by illness. Harvests, pensions, the futures of children, each policy a small confession of what a society could not bear to lose. In time, whole nations took up the idea that the coffee house had refined. Governments built vast pools of their own for old age, for unemployment, for sickness and injury, gathering the contributions of millions to soften the hardest turns of an ordinary life. What a merchant had once bought for a single ship, a nation now offered to all its citizens at once. What had begun with merchants sharing the perils of the sea had grown into one of the quiet foundations of the modern world. Behind nearly every mortgage, every hospital, every voyage and venture sits some promise that a loss, if it comes, will not fall on one set of shoulders alone. Yet the mirror shows the shadows too, and an honest story must look at them. A pool can only protect those allowed to enter it, and not everyone in every age has been let in. The poorest have often gone uninsured, the very people least able to absorb a blow when it falls. Some risks have been quietly refused, some places and people judged too costly to cover. The same careful arithmetic that shelters so many can also, quite coldly, leave others outside in the rain. And we have already seen the darkest use of all, the long centuries when the trade insured human beings as cargo and pronounced it ordinary business. The ledger that can hold such tenderness can also hold great cruelty with the very same steady hand. So insurance is neither hero nor villain. in the long human story. It is a tool and it is a mirror, and like every powerful instrument, it has served both mercy and greed, sometimes on facing pages of the same book. At its best, it is one of the gentlest things we have ever built, a way of saying to one another, across distance and difference, when the storm comes for you, it will not find you standing alone. At its worst, it has counted some lives as worth more than others, and turned its back on those most in need of shelter. Both of these things are true. Both belong to the story. Perhaps that is the most honest way to hold it. Not as a marvel and not as a villain, but as a deeply human invention, carrying all our care and all our flaws together, out across the dark water. And the dark water is still out there tonight, just as it always was, with countless small lights moving slowly across it, each one a ship, and each one a promise, quietly kept. So now, as we so often do at the end of these nights, let the journey grow quiet. We began with the oldest question of all. What if? What if the ship is lost, the fire comes, the harvest fails? For most of history, there was no good answer, only the long odds and the cold prospect of facing misfortune entirely alone. And then, slowly, across thousands of years and countless lands, human beings found a gentler reply. Share the weight, pool the risk, let the many quietly carry the few, and let no single soul bear the whole of a disaster. We followed that idea from the riverbanks of Babylon to the island of Rhodes, from the burial clubs of Rome, through fire and plague, until at last it settled in a smoky little coffee house in London, gathered around a dark and bitter new drink. We watched a man named Edward Lloyd, who never insured a single ship, build a place where the whole ocean could be heard at once. We saw the slip passed from hand to hand, the names signed one beneath another, the candle burning slowly down over a quiet auction of ships. We sat with the harder truths as well, the wagers on strangers' lives, the unforgivable ledgers of the slave trade, the dust that waited decades in the lungs of working men. We heard the bell ring out once for loss and twice for safe return, and watched an institution nearly undone by the long memory of its own promises. And through it all ran a single, patient thread, the simple, stubborn idea that no one should have to face catastrophe alone. Tonight, that idea is still at work all around you, mostly unseen. Somewhere, a clerk closes a file at the end of the day. Somewhere, a promise quietly renews itself for another year. Somewhere, a family sleeps soundly beneath a roof that, should the worst ever arrive, 1,000 strangers they will never meet have quietly agreed to help rebuild. Out on the dark oceans, ships are crossing even now, each one named in some quiet ledger, each one watched over by a promise made long before it sailed. Above them, Satellites drift in their orbits, insured against the silence, and in a hall of steel and glass in London, an old bronze bell waits in the stillness, holding its voice for the moments that truly matter. And you do not need to carry any of it tonight. The risks of the world are already shared, already softened, already held by countless hands you will never see. So let the ledgers rest. Let the ships sail on through the dark, watched over and unafraid. Let the bell hang silent and the candle burn low, and every distant promise keep itself without your help. You are held in more ways than you know, by the quiet care of strangers, by an old, gentle agreement that misfortune, when it comes, will not be faced alone. The world slows, and so do we. Good night.